Good day everyone, I'm Sumojo Charmaine from BSB Marketing 2E, the leader of Group 7. And we are here to discuss the Module 7, which is the accounting books, journal, and ledger.
I am Maria Cecilia Naco and I'm here to discuss the first part of module number 7. In the book of account, we have two types of journal. It is a general journal and the special journal. When we say journal, it is a book of original entries and their job is to record all the particular transactions in the company or business through journal entries. All the transactions that cannot record in special journal will be recorded in general journal. For example, depreciation expense is non-cash items where you did not do anything. Therefore, this expense will record in general journal. Our entries will going to be debit depreciation expense and credit accumulated depreciation. Special journal can make it very easy to post entries into the accounts. The transactions that will record in special journal is a specific type. The special journal are used to record transactions similar nature like cash receipts, cash disbursement, and sales journal. Cash receipts journal are all the transactions that the company received or all the accounts receivable will be recorded in cash receipts journal. O ay yung nakatanggap ang kumpanya ng pera o katulad na lamang ng accounts receivable kung saan nakolekta ito ng kumpanya at kailangan itong i-records sa cash receipts journal. While the cash disbursement journal are records all the purchase that paid immediately. Or we can say that you paid the purchase you did in cash. Ito yung mga binili mo na binayaran mo agad. Halimbawa, nagbayad ka ng renta o bumili ka ng supplies at naglabas ka ng pera. Sales journal is where you will record all the owed by the customer to keep track on the sales of the company. Ito ay yung mga nabenta mo na hindi binayaran agad ng mga customer, bagamat ito ay kanilang inutang at kailangan mo itong i-record sa sales journal. Purchase journal is used to record inventory on account. Ito yung mga pinurchase mo na inutang mo lang. For example, yung business mo is buy and sell. Then wala kang pang abono para makapag-start ng business. Then yung gagawin mo, uutang ka na lang doon sa supplier para ma-start yung business mo. Babayaran mo na lang siya kapag nakabenta ka na ng mga products na ibibenta mo. Importance of using journal. First is the journal shows all information concerning a particular transaction. As what I've said earlier, that journal helps to record the particular transaction to know the financial position of the company. Second, the journal provides chronological record of all the financial events in the business all the time. If we want to know about a certain transactions of years or months back, we can trace the said transactions as long as we have the date of the said transaction. The entries in the journal are arranged by the date. That makes it necessary to locate a particular event. Using this journal, we can now know the flow of sales of money that the company will collect and withdraw. The use of general ledger. The general ledger is where you can see the effects of the transactions of the accounts. This is also known as book of secondary entries. It is used to record all the company's transactions, like transactions in assets, liabilities, equities, revenue, and expenses of the company. It is also used to prepare a financial statements and have list of all accounts that are active.
Account title. The account is made up of T, which is where it gets its name. It has an account name. For example, on the left side there is a debit side, which is an entry recording an amount owed. Listed on the left-hand side or column of an account, a double entry system of bookkeeping where each debit has a corresponding credit entry. And for the right side or credit side, an entry recording of sum received listed on the right-hand side or column of an account. The columns should be added across and down. The total debit should equal to a total credits. Account code is a 6-digit field used to clarify financial activities and balances with the general ledger. The first digit of an account indicates whether it is a balance sheet or income. Statement item as defined below. Account title is the unique name assigned to an account in an accounting system. An account title is essential when the accounting staff need to identify an account. Since the title conveys the purpose of an account, classified by types of major accounts. Accounts are classified as asset accounts, liabilities account, capital or owner equities, and withdrawal. Now that we discussed the account, now we will explain what is contained in this account. You've heard about debits and credits. You know that they increase and decrease certain accounts. But how much do you know about the accounts they affect? There are 5 types of accounts in the accounting. If you don't know what they are, your crash course arrived. The 5 types of accounts are asset, expenses, liabilities, equity, revenue, or income. In financial accounting, an asset is any source owned or controlled by a business or economic entity. It is anything that can be used to produce positive income value. Assets represent value of ownership that can be converted into cash. An expense is the cost of operation that a company incurs to generate revenue. As the popular saying goes, it costs money to make money. Revenue is a total amount of money bought in a company's operations, measured over a set amount of time. A business's revenue is its gross income before subtracting any expenses. Liability is defined as the future sacrifices of economic benefits that the entity is obligated to make other entities as a result of past transactions or other past events, the settlement of which may result in the transfer of use of assets, provision of services, or other yielding of economic benefits in the future. Equity represents the value that would be returned to the company's shareholders if all the assets were liquidated and all of the company's debit were paid off.
Hi, this is Charmy Sumayo, and the topic I will discuss is about balance account. Balance account is the expectation that a particular type of account will have either a debit or a credit balance based on its classification within the chart of accounts. So there are different parts of account in balance sheet, and the following are asset account. Asset account is the categories within the business's books that show the value on the debit side. Contra assets are the values on the transaction books appear on the credit side, such as allowance for bad debts, accumulated depreciation of store equipment and office equipment. And this account is may either zero balance that affecting of reducing the account balance on credit. The second one is Liability accounts. Liability accounts is the categories within the business's book that show the value on the credit side. The third is equity accounts. Equity accounts is the value interest of owners. And the fourth is income. Income is the categories within the business's books that show how much it has earned and placed on credit. And the last one is expense. Expense is the categories within the business's books that show the cost of spend and counterpart of income in which placed on the debit side. That's all. Thank you.
The transaction can be between two persons engaged in business who are performing it for mutual profit, or between a commercial entity and a customer, such a shop. I-analyze muna natin ang business transaction nito. Una, alamin muna ang mga accounts affected. Lagi natin tandaan, may dalawa o higit ng account na involved. Ikalawa, next naman na dapat natin malaman kung ano ang magiging effect ng transaction in terms of increase and decrease. February 2, rendered services to X company for 15,000 and receive cash payment on same date. First, i-determine muna ang accounts affected. Account affected, cash and service revenue. Effects, account equals liability plus capital. Since ang company naka-receive ng cash, it will increase, pati na rin ang revenue since revenue ang ginamit na services. February 2, rendered services to X company for 15,000 and receive cash payment on same date. First, i-determine muna ang accounts affected. Account affected, cash and service revenue. Effects, account equals liability plus capital. Since ang company naka-receive ng cash, it will increase, pati na rin ang revenue since ang revenue ang na-receive ni business. February 4, paid rental for the amounting to 3,500. So, ang accounts affected ay cash at paid rental expenses. Assets equals liability plus equity. Cash was used to pay to the rental, which means cash is decreasing. Cash is an asset that decreases on the credit side. Paying a rental creates an expense for the shop. February 5, collected accounts receivable from Y company amounting to 30,000. The amount was included beginning stated above. Accounts affected is cash and accounts receivable. Accounts equals liability plus equity. Magdadagdagan ang cash na kinolect at mag-i-increase. Mag-i-increase din yung equity natin. February 10, rendered services to Jose on account 18,000 to be collected on March 2016. So, naka-receive cash na services na ni-rendered. The accounts affected is cash and service revenue. Since naka-receive ng cash si Jose, mag-increase ang kanyang cash. Mag-decrease ang net income ni Jose kapag kinolect yung 18,000 sa March 2016. February 15, paid salaries of staff 7,000. Account affected is salaries, expenses, and cash. Magde-decrease ang salaries expenses dahil naglabas siya ng cash para magbayad ng salary ng kanyang mga staffs. February 18, paid accounts payable to Marine Company amounting 5,000. The amount was included in the beginning stated above. Account affected is cash and accounts payable. Nagbayad ng cash sa Marine Company ng 5,000, pag increase ang equity ng company. Decrease naman ang account dahil sa debit. February 20, rendered service to Maria Company for 23,000 cash. Account affected is cash and service revenue. Naka-receive ng 23,000 cash mula sa rendered service. Maria Company's account increased while other account is decreased dahil nagbigay ito sa Maria Company ng 23,000.
Hi, I'm Dominic Pacamara. Now let's discuss the General Journal. Ang transaction sa naunang table, itatransfer naman natin siya into General Journal. What is General Journal, by the way? General Journal is a business transaction. This is the book of accounts where the information is initially recorded. This is where we record the transaction by entering the accounts to be debit and the accounts to be credit. Now, take a look to the table. Take a look to the General Journal. We put the date next to the account title where the transaction has taken place, and then we'll have our debit and credit. We have to know which is the account is debited and credited. In February 2, cash 15 pesos is debit. Then the service revenue is also 15 pesos in credit. Debit and credits are always equal. And every transaction, one debit and one credit. Why are they need to be equal? Because in transaction is always need to be balanced. In February 4, rental expenses 3,500 in debit. If you spend cash, it also considered is a credit. Check the rental expenses in the General Journal. Remember, the expenses are always debit. The cash is also 3,500. Now, in February 5, cash is 30,000 in debit. The account receivable is 30,000 in credits. In February 10, accounts receivable is 18,000 in debit. Service revenue is also 18,000 in credits. In February 15, the salary expense 7,000 in debit. Paid cash is also 7,000 in credit. Now, in February 18, accounts payable debit 5,000. Paid in cash also 5,000 pesos in credit. In February 20, cash 23,000 in debit and service revenue was also 23,000 in credit.
Hi, I'm Patrick Maniego and will report for this slide. So, recall the accounting cycle that after journalizing the transactions are then posted to the general ledger. However, instead of using a three-column, the general ledger format will be using the T accounts. The T accounts for the transactions journalized above are shown below. Cash each table consists of T accounts. Cash is the beginning balance is 25,000, 2 over 2 is 15,000, 2 over 4 is 3,500, 2 over 5 30,000, 2 over 15 17,000, 2 over 20 is 23,000, 2 over 18 5,000, the total of 93,000, and the ending balance is 77,500. And for the accounts receivable, the beginning balance is 100,000, 2 over 10 18,000, 2 over 5 that is 30,000, total 118,000, and total is 30,000, and the ending balance will be 88,000. After totaling 118,000 minus 30,000, the ending balance will be 88,000. Now, what is a T account? A T account is a graphic depiction of an account that you may use to plan out the journal entries and to write record transactions. Examine a T account in the balance sheets. Does it look similar? That's because the underlying concept is the same. Debits are on the left and credits are on the right. We will look at the numerous entries in the journal, determine what credit and debit are so that you may correct it and return it to its rightful state. After posting to the ledger or the T accounts, the trial balance for the above transaction is. In accounting, the term debit refers to the left side of an account, whereas the term credit refers to the right side of an account. However, it is understood differently depending on the type of the account is questioned. Debit is also denotes an increase in the value of assets or decrease in the value of liabilities, whereas credit denotes a decrease in the value of increase in the value of liabilities. And for the rental expense is an account that keeps track of the cost and of renting a property over the course of reporting period. Compound journal entry. An entry that involves two accounts only, one debit and one credit, is called a simple journal entry. Some transactions, however, require more than two accounts in journalizing. An entry that requires three or more accounts is a compound entry. A compound journal entry is one that affects three or more account heads. A basic journal entry consists of two rows, one debit and one credit card. Compound diary entry consists of three or more rows. A compound entry is actually a combination of two or more simple journal entries, but rather than recording numerous separate journal entries for a single accounting event, it is preferable to merge multiple journal entries for a single accounting event into a single compound entry because it saves time and keeps the related debits and credits in one place in the journal. To illustrate, Ariel Garden Supply Store acquired a land for 80,000 pesos. Ariel paid 300,000 pesos cash and issued a promissory note for the balance.